Before we start today's backtesting, I received a lot of messages saying we don't know how to identify dealing ranges. What is another alternative that we can use? So today I've come answering that question with a different alternative. What you can use if you don't really know how to identify dealing ranges. This will help you because this is a very mechanical way for you to identify what to wait for before you can search for your M or W pattern. This another alternative. If you don't know how to identify dealing ranges, for you to wait for price to come to premium or discount, what you should do is that you should always measure a move. After measuring the move, you should see if that move is impulsive or not. A move is impulsive if it moves more than 45 pips. So if you see that a move has moved more than 45 pips, that's when you actually wait for 40 pips retracement back. Then after the 40 pips retracement has been met, what you do is you wait for your M and W. But if you don't see any impulsive moves, meaning the move that you have measured is less than 45 pips, what you do is you just wait for the time to meet, which is from 5 to 8 p.m. If that move has happened, if it's within that time and you see your W pattern and your impulsive move is less than 45 pips, then you can just search for an entry there, as simple as like that. You just draw you take your measuring tool and you measure the pips. Very mechanical like that. It will help you rather than seeing where to draw your Fibonacci and all that, which can be very confusing. So let's go on with the backtesting. First, what we do is that we go to the calendar and we see which days are valid before we can get to the charts. Going to the calendar, you can see that from 1st Feb to February, the 3rd of Feb, this days here, you can see we have NFP, so we will not be trading from 1st to Feb to 3rd Feb. What you do is that you wait for Monday, February 6th. So let's go to this day and we see if our daily condition was met on this day, and we see if we can get an entry in the 15 minutes time frame. We are here again on the daily time frame after checking the calendar and after seeing that the 6th Feb is actually a valid day to trade. We are here in the daily time frame. Remember, we are only looking for buys when it comes to CADJPY. So looking for buys, remember the other rule that the previous day needs to buy or it needs to close bullish for you to be looking forward to buy the following day. So from here, you can see that this candle here on Friday, it closed bullish, so it validates us buying on Monday, which is the 6th Feb. Let's go in the M15 time frame so that we can actually look for our M patterns, but first we need to see the impulsive move if the M15 has made more than 45 pips impulsive move, so that we can search for retracement, wait for retracement back, or we can actually wait for the time 5 a.m. to search for our W pattern so that we can actually enter in the trade or place trades. Let's go in the 15 and actually see that. Coming in M15 or 15 minutes time frame, what I said before is that you measure the impulsive move. Let me take here the tool, then you measure. You can see clearly from here to here. This is the impulsive move up that CADJPY made. So you'll be measuring from here to up. You can see it is way beyond the 45 minimum pips that I gave you guys as a condition before. So after seeing this, what you do is that you wait for at least 40 pips. It needs to be 40 pips so that you need to wait for the 40 pips retracement before you can actually look for trades. So from here, you can see here, there, it's 40 pips. Let's just put it here. It's like a little pips down. We can even put it well. Yeah, let's just put it here. And you can see here, this is on Friday. Let's wait on Monday. Okay, let's reduce the speed. So from here you can see. So after it goes up, you just update it with where the current price is. Let's wait until it comes down. You can see here it has already came down. So there we already have the 40 pips retracement. After that, you see, is it already 5? Yeah, here it's already 5. So after it has reached 5, what you do, you follow the other rules that I always mention. You have to wait for a W pattern to be formed. So from here you can see it's down, up, down. So this is the neckline already. Let's draw the neckline. Yeah, so from here we'll be waiting for a candle close above this neckline. Okay, you can see there we don't have the close. Up, down. So the neckline changes. It's not here anymore. It is down here. Let's see if we're going to get a neckline close up there. You can see here we already have a neckline close there. So let's see. You can see here it's around 6:30. So for us to actually getting to place a trade here, we need 1 hour time frame, which is here. The 1 hour time frame, the candle between 5 to 6, it should have closed bullish for us to actually enter. But here you can see this is bearish. So we need to wait until this candle closes. So we can only enter or be able to place trades around 7 to 8. So we are waiting for this candle to actually close bullish for us to enter any trades. Let's see here. We are still here. We are still 6. We are waiting for 7. And there is 7. So it means that is where our entry has to be, with our risk management of 15 pips stop loss and 45 pips take profit. Let's see here how this trade actually was. Okay. And there the the stop loss gets hit. So that the stop loss gets hit, what I do is I wait for another W pattern to be formed. Let's see, because it's still early. It's around 9:45 a.m. So let's see. Let's see if this price will actually print another W pattern. So here we have down, up, down. So the neckline could have been somewhere here. Let's delete this. But then it's likely here for the price to still form another W. Okay, so you can see there, this price has already closed up here. So let's see if H1, this is 11. So the candle from 12 to 11 should have closed bullish for us to actually enter this trade. If you go to M15, I mean 1 hour time frame. If you go to 1 hour time frame, you can see this candle here. This candle is bearish, so we'll be waiting for this candle to close fast. We'll only be placing trades from 12 to 1. Let's go back on the M15. If you go here, this is 11. Let's wait till 12 for us to actually be included. So this is 11:15. This is 11:30. We're not in the trade yet. And this is 11:45. So here we can place our sell position, a sell limit. We wait for the price to come here to let us in, and we see how it will react after. If it either goes to break even, stop loss, or take profit. Let's see here. You can see here price lets us in. It triggers us in here. We set our 20 pips place where we set our break even. Let's see. There, so here we'll be going break even. You can see here the price was actually fast. It just shot up. Let's see. Yeah, so from there you can see it hits take profit. So from this day, we would have made 2R since we had 1 loss. So from here, remember we don't trade the following day. So if if you go back to the calendar, you can see here, this 7th will not be trading. We'll only be trading again on the 8th. Let's go again on 8th and we see how the daily time frame was before going to the M15 to search for entries. If you go in the daily to trade on the 8th, it means 7th should have closed bullish since we are looking forward to buy. And you can see here, this candle here closed bearish, so it's automatically invalidates our Wednesday day, so we'll not be trading on Wednesday. Let's check the calendar to see which day actually is profitable to trade. You can see from here, not profitable but a valid day to trade. So from here you can see Tuesday 9th is actually valid. Let's see if this candle will close bullish so that it can validate our day on 9th February. So you can see here 9th, 8th closed bearish, so that also makes 9th an invalid day to trade. And remember, we don't trade Friday, so we put this Friday, we don't trade on Friday. Let's check if 11th is actually a day to trade, because you can see here on Friday this closed bearish, this closed bullish. Let's see here on the date. When it comes on Monday, you can see on Monday this is actually a valid day to trade since we do not have any news. Let's here we can go in the M15 time frame to search for our retracements and our entries. So here you can see, let's measure if we have any impulsive moves. So the first thing we do, we measure if our impulsive move here was more than 45 pips. So you can see here, this is way more than 45 pips. You can even measure from here, you can see this is way more than 45 pips. So we won't be entering any trades or placing any trades on the 30th of Feb if this market has not made a minimum retracement pips of 40. It has to be 40. Let's see here. You can see here we're on Monday already. Let's update it. Okay, so you can see here we are not really getting any retracement. The price is just moving up aggressively. We are not getting any retracement. Let's see, what time is it? This is already 10 p.m. So this automatically invalidates, because remember we stopped trading at 8 p.m. GMT plus 2. So let's go back to the calendar and see if 14th Feb was a valid day to trade. If you go on the 14th Feb, you can see here we have CPI, so this is not a valid day to trade. And if you go on the Wednesday 15th, this is actually a valid day to trade. Why? Because we do not have any news. If you want to see which news I actually look at, remember to see episode 1 of this backtesting series. There's even a separate videos that explain the strategy very well. So go through it and just actually get an insight of which news I actually look at. So without further ado, let's go to the daily time frame and we see if actually we got if Monday, if Wednesday, February 15th was actually a valid day basing on the daily time frame. Going to D1, you'll see that here at the on the 15th Feb, you actually see this candle here closed bullish. So that makes our day on the 15th Feb valid. Let's go in the 15 minutes time frame and actually search for an entry. Like I said before, what you always do first in the M15, you measure your impulsive move. The impulsive move here, you can see it's more than 45 pips. What that means is that you wait for your 40 pips retracement first before you look for any entry. So here let's see 40 pips. Yeah, 40 pips is approximately there. Let's see. Okay, you can see here this is already 40 pips. Let's wait until this gets to 5 a.m. for us to look for any entries on this day. Okay, so from here you can see that it's already at 5, but then here we had a W pattern here. We had it here, but here there was another W pattern that was created. You can see, let's draw another one. You can see we had a down, up, down, up. It closed up here. And I said this in episode 2. You can go and see that if it makes a W pattern and it moves more than 20 pips, I will not be looking for an entry back at the neckline. What I will be waiting for, it is another W when it comes back to the neckline, or another W formed exactly here. But then if this goes again up to 45 pips, I'll be waiting for another retracement back, another 40 pips retracement back for me to actually enter this trade. So from here, you can see it did not move 20 pips. It's less than 20 pips. So I can actually get an entry here down at the neckline. Let me draw the neckline well. Yeah, let's see. So from here, you can see the price has already moved way beyond 20 pips. So right here, what we do is we can search for another W pattern. And from here, you can see this is another W pattern formed. Down, up, down, up. So let's put our neckline here. But then remember, to enter at 7:30, it means a candle from 6 to 7, 1 hour candle. It needs to have closed bullish for us to enter that trade. If you go in H1, you can see here this candle here from 6 to 7. It's bearish. So we'll be waiting for this candle to close for us to enter any trades. And if this candle closes bearish, we will not be having any entry. Let's see at 8 what we'll be having at 8. Okay, here is 8. So let's have our entry there. Can actually put our entry back to the neckline. But let's first test how many pips is from here to here. If it's 45, then that trade it will be automatically invalid. If you actually measure from here up there that I showed before, if you measure from here to here, you'll see this is less than 45 pips. So we can actually enter or place any trades in any W that will be formed. And in that case, it was like it's somewhere here because that. And here you can see that the price is yet to come to the neckline, but remember, we will not be entering any trades. We first need to see the 1 hour before. Yeah, let's check the 1 hour before here. 1 hour. How the 1 hour before here. So you can see this is very bullish. I mean bearish. So we won't be involving ourselves in any trades since this still looks very, very bearish. So we wait for another candle because this candle will close at 9. So we wait for another candle from 9 to 10 to close. So the trades that will be available will only be after a candle has printed bullish so that you can actually be in any trade. So if you go to another candle, you can see this actually closed bearish and this is bullish. So let's check if we have an M pattern there, W pattern, sorry. From here, let's see, this is 445. We have here is our neckline, but let's see. What time was this? Is 9:45. This is 9:45. Let's check at 9:45. In 9:45 is along this candle. We are only looking forward for trades that are formed after 10. So the entries that are from 9 to 10 are not going to be valid. The only trades that are valid is from 10 to 11. So this, make sure like you actually understand it pretty well. If you don't, you're going to find yourself in trades that you should not be taking. Like here, you can see here, this one would have already taken your stop loss. That's why like you always have to wait for another neckline. Another neckline here, you can see it is this one here. That one there, let's wait for neckline close up. So yeah, let's see if we're going to get another. So here we have another W which is about to be formed. And here it closes. Let's see if 1 hour supports that trade. If you go in 1 hour, you can see here this closed bearish. So we wait for this candle to close. So we can only be involved in a trade between 1 to 2 p.m. If you go back in M15, let's put our buy position. But remember, we are only going to be involved at around 1. So here you can see this is still, it's not yet 1, so our trade is not yet triggered. And there we have, it's already 1. So let's see where we'll be setting our BE at 20 pips. Yeah, there, let's see. If you go there, this is where you set your BE, but this, it retraced back, but it never really hit the BE point. Let's see if it would actually hit take profit, and there you see the trade actually will be hitting a take profit. So this, you would have made a total of 3R from this trade. Let's see. So remember, we do not trade a day after a profitable trade. So here 16th is not a profitable trade. Let's go to the calendar and we see actually which days will be valid days to trade after 16. If you go to the calendar, you can see here 16th is not a day we are looking forward to trade. And remember, we don't trade Fridays. So the only days that we're looking forward to trade is Monday, but Monday is also an invalid day to trade because it's a bank holiday. And we do not trade on bank holidays. And also we don't trade on CPI. So it makes Tuesday an invalid day to trade. And when it comes to the following day, here on February 22nd, this is another day that we can actually look for trades. So yeah, like I said before, the only valid day to trade here is on February 22nd. Let's go in D1 and we see if this day is actually valid, because we do not depend on the calendar only. After seeing the calendar proves the day is valid, you go to D1 and you see if that day is actually valid for you to trade on. On the daily, looking at the daily time frame, you can see that the 22nd Feb is not actually a valid day to trade. It is not a valid day to trade because you can see here this actually closed bearish, which makes the Wednesday 22nd Feb invalid. Let's go to the calendar and you see if the following day, which is the 23rd Feb, if we see it's valid or invalid. If you go here, you can see that here on the 22nd Feb, we have a bank holiday, so it means here we will not be trading CADJPY. And remember, we do not trade on Fridays, so the only option that you have, it's Monday 22nd and Tuesday 28th. Let's check and we see if for any of this day, if it will be a valid day, but we're going to check first on Monday 27th Feb, sorry. On the daily, you can see that Friday 24th Feb closed bullish, it closed bullish. That makes our day on 27th Feb valid. Let's go in the M15 and search for an entry. So as I've said it before, what you do is you measure the impulsive move. You can see this is the impulsive move and it's more than 45 pips. Like I said before, you wait. After that, you wait for the 40 pip impulsive 40 pip move retracement for you to be looking for any trades. So if you don't get the 40 pip retracement, you will not be looking forward for any entry on that specific day. Let's see here. So here, let's put it up here. Okay, is this 40 pips? It did not really get to a 40 pip. Let's see. Okay, so we don't really have a 40 pip retracement there. We don't really have it there. Let's see. Yeah, on this day we do not have that 40 pip retracement. Let's see on the following day. Okay, because this is already out of the day that we're going to trade, and this we're going now on the following day, which is the 27th. And if you check here, and if you check on the calendar, 27th day is actually a valid day for us to trade. And you can see here, since the following day was trending bullish, this day actually becomes a valid day for us to trade, for us to actually look for trades on. Let's first measure our impulsive move. If you measure here, you will see this is how many pips? This is 40 pips. So it's not a very big impulsive move, which is greater than 45 pips. What we do is we wait for the time to get at 5 so that we can look for any entries at that point. Okay, if you let's wait. There we already have 5. The price has already gotten to 5, and we already have this W pattern here. Oh, you can always like draw fast so you can see if you see it well. You can see here this is the W. If you put it aside, you can see this is a W pattern, so you wait for it to come to this neckline. If you draw it here, you do not enter here first. You have to go to daily, and you see here it's 5:30. So the candle between the candle which closed at exactly 4 to 5. If you go to 1 hour time frame, you can see this candle here was bearish, so we do not have any entries at that point. Let's wait for another W pattern. So there we have another W pattern with a neckline here up. Let's check. Okay, we have another. Okay, it's the same W pattern, and this closed up. So to enter any trades at this retracement back to the neckline, this is 7:30. So the 1 hour candle which closed between 6 to 7, it should have closed bullish for us to enter in any trades. Let's see here. You can see here the candles that were 6 to 5, 6 to 7 here. It was bullish, so we can enter any trades from 7 to 8. Let's see here. Let's go to 15. Let's see if we're going to get any retracement back there so that it can trigger us in the trade. Let's see. Okay, so I don't think price can really give us any entries after it has made all these big this very much big moves. You can see it has even made more than 20 pips. It's more than 20 pips, and I said after price has made more than 20 pips, let's go back. We wait for another W pattern, and then from here you can see we have a W pattern here, up, down, up, yeah, up, down, up, and this is our neckline. So you can see here we have our neckline here, and let's first see daily. I mean 1 hour time frame, but then let's check the time. You can see here 9:30. So the candle from 8 to 9 a.m. Yeah, so a candle from this, let's check the time again. The time it's 9:30. So the candle from 8 to 9 should have closed bullish for us to be placing trades at the neckline. So let's go to 1 hour time frame. If you go to 1 hour time frame, let's see from 8 to 9, you can see here this candle here is bullish, so a trade here is valid. Let's go in M15 and place that trade. If you place that trade here, let's see if it will trigger us in. Yeah, and there we're already in the trade. Let's see if it's going to be stop loss or take profit. Okay, so there you can see we have our 20 pips move, so we are BE there. Let's see if it's going to take profit of that. And here it stops us in break even. So, and you can see here this is 28th Feb. So that marks the end of our backtesting session. And let's see the total P and L for the month of Feb. Okay, so the month of Feb we had four trades. We had 1 break even, 1 loss, and 2 take profits. And that, having all those trades, it sets us to a total profit of 5R. So if you would have traded following all the rules that I just said, February would have ended with a 5R profit. So from January to now, remember in January, in the previous episode, go watch it, you will see that if you would have traded January, you would have made 3R. So with this 5R, you would have made already 8R. So there it would have taken you just 2 months for you to actually pass a challenge, because in almost each and every prop firm, many of them, they have a standard of 8% phase 1 target. So in just 2 months, with only 1 pair, you would have passed already your phase 1 challenge using this strategy. So that is all for this video. You can see in this backtesting, we had almost, like I said before, we had 4 trades and we had a 5R take profit. If you want to learn more the trading, or if you're new to this channel, don't forget to subscribe to my YouTube channel. Don't forget to join my Telegram channel too. And also text me in my Telegram if you have any questions regarding this strategy, or my Instagram. If you have any questions, don't forget to text there. Until next time, it's your girl, the Rwandan Trader. Bye!